Okay, I'm just going to run through a quick market radar update. So, a little bit of action in the US yesterday. I think it was Trump tweeting again. Let's just go and have a quick look at the bigger picture charts. So, transports still in a range, little pullback. I like to see what the DAX and the transports is doing as a pair, really, because when they move together I take notice. DAX still melting higher, so interesting. Let's go to the Dow Industrials. We've got what looks like a double top. When we see a double top, we put a line on it and say, you know, that could be a base. So, talking about this in last week's radars, we've already turned down on the short-term trend model on a lot of these indexes. Let me just show that first, actually. So, this is the secondary trend. Primary trend is the big picture trend of the markets. Secondary trend is like the swings up and down within that big picture trend. So, primary trend is kind of sideways. It's up on the US and it's down on some of the European ones to sideways on things like the Russell in the US and, you know, small caps in the UK. So basically we bang on 50% for primary trend. Secondary trend is just below. It's gone from that swing. We've been in, you know, we've been in sort of mid-trend for a few weeks now, and you know, the swing down in the secondary trend was good for swing trades higher. We're drifting back in again now. Are we going to hold this mid area and have another, you know, a move up into some real bullish markets, or are we just going to digest a bit more? That's what we're going to look at. Index trend model. Bang, 50%. Trend slightly down, price action slightly up. That's because we've been ranging. Bullish is coming in. The US has been coming in on how bullish it was. Europe has been coming back up. There was a big divergence between the two. You know, one was pointed right, one was pointed left. We're coming back into some kind of equilibrium in the middle. Large caps and small caps, even more. You know, the large caps have been bullish, especially US large caps. This is a merge of the two, and small caps have been completely on their ass, basically. You know, and especially in Europe, UK, where I do my small cap business. So, you know, we're coming back into that little bit of mid ground on everything, middle of the road, everything here. You know, doesn't mean it's going higher, doesn't mean it's going lower. Let's just kind of look at the evidence. 6-month closing highs, just bumbling around in the lows still, but the market's holding up. That, you know, the market's holding pretty well while these are bumbling around. That's actually quite a good sign, relative strength. You know, we need to see interest flow into them though. 350 trend model. This one is a bit of a leading indicator, definitely for us in the UK, and it's drifted back over the last couple of weeks. So, you know, that's what the trend models are saying. We're pulling back. Let's go and look at the market. Well, we know, you know, the short-term trend model is pulling back now. First things first, ignore that volume. Quad witching in the US and a Trump tweet, apparently. So, there's going to be a lot of volume. Is that a distribution bar? Yes, it is. You know, if it closed down on above average volume, but it's you know, quad witching volume in the US. So what's happening here? So that's what we've got now. The same with the S&P. We've been talking about this gap here. You know, it's moved up to highs. That's good. You know, it could easily come back down here. A couple of bad days in the mix, and then see what we, you know, Doesn't mean it has to come back down, but it just you know, it's definitely coming in at the moment. How far it goes, nobody knows, but you know, it's definitely expected. Nasdaq just happily just bumbling around up there. Not much really to say about that. Russell, bull flag. What's a bull flag? Well, you know, you've got flagpole and a little consolidation sort of move down to sideways. So the Russell came to life. You've got accumulation bar here, and you've got a meaningful follow through day here. Long stick on it, you know. Big moves and long sticks on volume are more meaningful than little tight rangey sort of ones. They don't mean much to us. So what we've got here, we've come up to a meaningful level and we're consolidating. So huge volume trading hands up here, but not making any further moves higher. What does that mean? That just means there's, you know, profit taking coming into it, and there's a lot of shares trading at this area, and then it's drifting in a low volume. Now that's what you want to see, but you know, you don't want to see it drop off a cliff like that, which, if the, you know, this is the Russell, it's the last to find risk in the US. If the Russell wanted to step up and break through those levels and the other markets want to hold up, yeah, happy days. But we don't want to see the S&P have 2 sick days and the Russell overextend. You know, it's, you know, just, we don't want to see the bad move play out twice as bad in the Russell, really. We want to see the Russell, you know, rotation. They're all talking rotation, but that's what we're basically looking for, rotation into a bit more risk. So, you know, we've looked at the DAX. It's a wild trade of the DAX. The FTSE 100, pretty meaningless for us in the UK, this one, even though it's a UK market. You know, it just chops around with full of oilers, miners, blue chip stocks. You're not going to gain much from this. It's always traded wild and loose. It always will do. But the 250, to me, the 250 is, you know, the US's Russell in a way. You know, we've got money flowing into the 250, so it's kind of flowed out of those US stocks. You know, there was leaders went out in large caps, some FTSE 100, some FTSE 250, but there's a lot more in the 250, so there's a lot more stocks at the lower sort of tier where, you know, you don't go to the FTSE 100 for nice trending gains. You go to the 250. You know, there's not many what in the FTSE 100 what have these nice trending moves. 250 is a different animal. You know, you can get some fantastic ones in the 250. So same again. We start to see some volume come in, and then we get very high volume here, but on a short range day. You know, that's just, yes, a lot of flipping of positions there, a lot of action in that little area, but not pushing it down. You know, it's just digestion. So, you know, this is digestion. In an inflection point off a low, high volume without any further pressure down can be a good little area of, you know, that the supply has been soaked up by buyers, and that's when you get narrow range, you know, after a spike lower or something like that, and then you get a big heavy volume day. You know, that's good to see in stocks and indexes. You know, we're seeing it here near a high. It's taken out a meaningful level last week, so, you know, big weekly volume, and it's trying to digest. Well, it has digested a full week without being tipped back into the range. It's okay if it comes back into the range, but we don't want to see it roll over on heavy volume and all the money just flow out of it again. So, you know, that's a good sign for us. So, you know, small caps, we've talked about small caps where we want to see it hold up. So far, so good. It needs to just, it's got this little bit of supply here. It's early days still, a little bit of supply. We just need to digest a bit and get through there. So that is where we are. We'll just quickly look at the gold composite. You know, it's had a good move. It was 2 standard deviations. It's trying to digest. And we'll look at TLT, which, you know, we mark this on the day. 1 second. I think the post's here. Yeah, so we marked it on the day. TLT bouncing off that mid-trend area. And that's basically where we are, you know, focusing on sort of growth stocks and the occasional swing coming forward. So I'll leave that there. I'm trialing something this year called Chat Room Plus. If you're interested in that, to get all these videos in Chat Room and evening screening, go and visit the members page. Okay.